Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of BOIL. And the reason I'm showing this is because I first want to congratulate our members who had a chance to participate in BOIL on the long side, especially our option traders. Just showing you this because it trades so nicely according to the technical signals. You can see back here, this was a bullish engulfing candle. We wound up getting short. A put spread took in a bunch of cash, and it went right to my target up here. So a shout out to those members. Again, congratulations, but be careful right there. We have a small little spinning top of the candle on lower volume. Make sure you're protecting your profits. Now, I normally don't do this, but I just want to show, again, a sneak preview of what we do on the member page for trading. We also took a long position in XLE through a calendar call spread. You can see this one's working very nicely. Again, members, keep an eye on the volume. We have a long stretch here of green candles. We have 6 green candles in a row. Volume is dropping. We actually want it to go to 80 if you have that spread. And then we'll have to see if we're going to roll. Another one, JOBY. Holy mackerel, this turned out to be a really nice one. Joby Aviation. We got long this one way down at the bottom, and we started selling the $5 puts. We own the stock, and we own calls on this one. And look at that pivot point, just really beautiful. This is a cheap one that a lot of people got into. Again, congratulations. Rocket Lab, for those of you who've had this one for a while with me, look at this candle today. Bam, straight up and on higher volume. So we're long this one in 2 ways. We're long the stock. We're long leap calls. And this one looks like it's really starting to heat up. We're also long gold, GLD. We have a position in this through the options where we short the puts, and we're long leaps. Again, if you're interested in learning how to make money, even with long positions in a bear market, you can go to Market Rebellion and subscribe to some of the services I put out. Now, for our equity traders, I'm just showing you some home runs here that we've had. Look at Coin. We had a really nice trade on Coin. We also are long APA. Look at that nice bounce off of there. We had a position in RIG. Some of our members still have this one. Again, keep an eye on that volume. Oscillators are starting to turn down right there. So enough of the long trades. Let me talk about the general markets because I think there's, again, some confusion as to what's going on in the market. If you think that we are out of the woods economically and out of the woods with regard to inflation, you need to think again, because look at what originally sparked this rally earlier this week was that the CPI numbers came in lower than expected. Now, please, folks, you have to understand that a knee-jerk reaction to a number that came in lower than what was forecasted does not mean we're out of the woods. Take a look right here. We had this little drop in the CPI, and guess what? We had that very same thing happen back during the crash of 2008, and we had that very same thing happen right before the COVID crash. So we are not out of the woods. I'm just going to go through some of these slides so everyone can see the reality of what's really going on here. Take a look. If you go to the supermarket, eggs are still up 47%. Now remember, they do not measure food and fuel into the core inflation numbers. So interest rates are still below where the core inflation numbers are. So the Fed is still behind the curve. And you watch, oil is going to start to perk up. You know, if you got the news this week that Russia's cutting back on production by 20%, so that's going to increase demand as the supply chain starts to dry up in the oil market to the EU, right? So now, this is just a slide I put together giving you the overall, last 12 months of what's happening. Again, the CPI comes out at 8.5%, but look at the real numbers down here, folks. I'll start at the low end. I don't even know. I think that's a little low. New cars up 10.3%. Food is up 13%. I think that is low, according to the Bureau of Labor Statistics and some of the numbers there. I'm seeing higher numbers overall in individual high consumption foods and such. Electric, I think that's pretty much on target, up 15%. I know that just from our own electric bills going up. But fortunately, we have solar panels to help offset that. We actually sell electricity back to our power company. Don't know how many of you do that, but I like that idea. I'm not, totally into green energy and converting out of fossil fuels, but I do like the idea of solar power, especially when we live in the Sunshine State. And then fuel oil, for those up north, remember, as we get into the winter months, fuel oil is going to go up. For years, my family was priority fuel out on Long Island. I know a lot about the heating oil business. And so this is going to be a big cost as we start coming into the winter months. Gas, I think everyone's in agreement that it's up 44%, and gas utilities up 30%. So again, watch the real numbers and be careful what you're being told. You have to do your research. Here's another one. Shelter/rent inflation. For those of you that are renting, you know exactly what I'm talking about right here. Now, this slide couples up with the next slide, which talks about real wages. So take a look at this and the spike and the cost of rent and the cost of living expenses with regard to owning a home. Straight up, right there, straight up. It's a 32-year high and has not pulled back, at least not yet. Hey, listen, I'm not trying to scare anybody. I'm showing you the reality, so use caution. These are the real numbers taken from our own government right there. This is another one. The labor market, this one I want to show you right here. Look at the jobless claims, and this is a 4-week moving average. See this red line right here, folks? That is an uptrend, if I've ever seen one. There's an uptrend, and it's getting ready to surpass the November highs back here. This is jobless claims, and that is coupling up with, guess what? Lower wages. Look at the earnings. This is very dramatic. I showed this on a webinar that I did with our members. And look what just happened in 1 year. We went from this high all the way down to this low in 1 year. Now, if wages are dropping, cost of living is going higher, and everything that goes along with inflation is increasing as well. Do you think we're going to have a soft landing? I don't know. That's what the headlines are telling us. Use your gifts of discernment and connect the dots as you look and research these numbers on your own. Take a look at this one. This is from our government again, showing consumer loans and credit cards. Now, this is slightly lower than what the real number is. In fact, CNBC yesterday announced that that number is now over $1 trillion. People are getting numb to what $1 trillion really is. And, you know, I put this in perspective one at a time. 1 million seconds is 12.5 days. 1 billion seconds is 33 years. 1 trillion seconds is 3,300 years. Put a dollar sign next to that, and maybe it'll give you an idea of what we're dealing with. We have more debt that we've accumulated over the last 2 years as a nation than the prior 100 years combined. That is absolutely incredible. We are way beyond the point of no return. And now I want to show you some numbers. Again, before I get into the analysis of the general markets, let me just show you the cues right here. You might remember this chart from a while back where I showed you the stages of a bull market and a bear market according to Dow theory. Last time I showed you this chart, I drew a little blue arrow and I said we were right here. Where are we now? We're right here. We're right at this high right here. Now, if we start to pull back next week or the week after, which I think we will form a pivot point right here, and that will bring us completely into phase 2. A lot of people are asking me, hey, are we in phase 2 yet? Are we in phase 2 yet? No, we're not. We're still in phase 1, but we're at the brink of moving into phase 2. You need to have this pivot point lower in order to be in phase 2. And then phase 2 is another drop to a new low. So we'll drop below that low and then rally back up to the former low here, which was support. And remember that role reversal I talk about all the time. That will turn into resistance. And once this happens, we go into phase 3, which is capitulation. This is where option traders are gearing up for that. So again, we are at the brink of moving into phase 2. And let me show you exactly how this is played out. What I'm going to do is I'm just basically going to take a monthly chart of the Dow right here and more or less superimpose what I'm talking about with the bear market and basically just trace the lines. So phase 1 is where we come down, we bounce, we start into phase 2 with a pivot point, then we bounce, and then we pivot lower into phase 3 or capitulation. Now taking a look at what that looks like on the chart, you can see that we're right at this point right here about to pivot lower. This is nothing more than an ABCD pattern really, where the top is point A, it goes down to a pivot point, point B. We cannot label that as C until we get the pivot, but once that pivot forms, it goes to C, and then from C we go to D, and it starts all over again. Now, if you want, again, an idea of what's happened in the past, you have to go back and look at the Fibonacci retracements as well. I'm not going to get too complicated here, but I just want to show you that in phase one of a bear market, as we go into phase two, it is not uncommon for us to see big bounces off the lows, especially in June. What am I talking about? Well, I'm just going to take my Fibonacci numbers right here. I'm going to mark from that high. I'm going to go to this low. And where are we right now? We're right at the 61.8 Fibonacci pullback retracement level right there. Keep that line in mind. I'm going to show you this on every bear market so you can see we are not in a bull market. We're in phase one of a bear market getting ready to go into phase two. How did that look in 2008? Well, if you go back and look, you can see right there we had the high to a pivot point. So AB went up to C. And then from C, we went into phase two, bounced just a little bit here, and then capitulation. What do the Fibonacci retracement levels say about that one? We'll take a look. If I mark from that high to this low, where did that bring us? Right where we are in the equivalent 61.8 Fibonacci, and it pulled back from that level. Again, I'm just trying to show you all what this looks like so you can see how history is going to repeat itself over and over again. I could even go back to the 1970s, 1974, when the markets went through a severe bear market where, again, we had this A, B, C, D. A to B, B to C, C to D, then capitulation. There it is. You see it? Where's the Fibonacci retracements bring us? If we go back in time and look from this high here to this low right there, there it is. 61.8 hits the line, pivots lower, and good night. We're into phase two. I can go as far back as 1929, actually. In fact, let's do that. Let's look at the crash in 1929 to see what's happened back when everything was looking good, coming out of the roaring 20s, right? What do we have? A to B, bounce, B to C, pivots lower, boom, and then phase three is right here. Capitulation. You see that? Again, where do the Fibonacci levels tell us it pulled back from? It's very easy. Learn how to use Fibonacci's. It's a great tool. Go from this high to this low, and exactly on that low, right there. This line right here, and it pulled back. Boom. So this is not about being right or being wrong. What we are doing here is basically graphing what's happened in history, overlaying that historic price pattern over the modern day charts and what we have right now. And you can see at 61.8, we could expect a pullback. Now, let's go right into the analysis now. I'm going to go back into the daily charts, and I'm going to change it up a little bit. I know I like to try to keep these videos 12 to 15 minutes. It might go a little bit over, but I assure you it's going to be worth it. Let's go to the Qs. Obviously, we did not hit that downside target. Do I think we will hit that target? Yes, I do. The big question is when. Here's what I'm going to do. It's a little bit of a change up. I'm going to go in here. I'm going to draw a price level, and I'm just going to draw a green dotted line. Bam, just like that. There's my price target. We could see a little bit higher next week because we closed right on the high, but look to the left. We have, guess what? We have a resistance point right there. So do not be surprised if next week or the week after we start to pull back. Remember, we have to see a pullback on the monthly chart, not the daily chart, for us to get into phase two. So next month is going to be a critical month. If we wind up lower next month in September, then it's game over for phase one. Then we start moving into phase two. Okay, so that is the Qs. That target has not changed. You can go back to last week's video and recap what we talked about then. DIA, same thing. Did that target hit yet? No, it did not. So I'm just going to draw a line right there. That's my green line. I'm going to leave that in place. You can see how far we are from this target, but I think we will get there. Now look down below. Look at the oscillators. We have a negative divergence on the stochastics, and we are at a negative divergence in the CCI. What does that mean? Well, the CCI is at the same level it was back here, but we're on a higher price level. So again, keep your stops in place. Like I said before, our members are making money on individual long positions. You could do that in a bear market, but you have to be very quick to take your profits. Hence the reason why I did a shout out for those in our membership who have Boyle. Protect your profits. All right, now let's look at IWM. That target, obviously, again, did not hit. And I'm going to keep that target right in place there. Just going to keep that dotted line. Look to the left. We have a very significant resistance point up at the top. Look down below. We have a drop in volume, even though it's a green candle. And we have a hinge forming on the CCI. Remember the negative divergence. See this high back here on the CCI? Look at where the candle was at that particular point in time. We were right here. We had a much higher high, but look at the highs on the CCI. They're lower highs. This is one of the most significant sell signals or bearish indications that you're going to get. Don't take my word for that. Go back and look at any time when we started selling off. Look at this. Look at this high right here down below on the CCI. That was on this price high right here. We went to a higher price high, but look at the CCI. Look how dramatic that is. Same thing was back here. Went to a higher price high, but we had lower price highs on the CCI. You have to pay attention. This is not a time to be getting, let's go buy everything and put our money to work because it's, the bear market's over. You have to be really careful, folks. I'm pounding the table on risk management for years now, and you can't go wrong protecting your position. Let's look at SPY. SPY, same scenario. We're right at a key resistance up here. I'm keeping my target down there. There's my green dotted line. I'm going to get rid of this because that green line takes over that. The downside target is still in place. Same thing. Negative divergences on the CCI right across the board. Negative divergences on the stochastics. Right? Again, go back and look at any chart. It could be any time frame. It could be any. It could be any commodity. It could be any Bitcoin. It could be anything like that. Just make sure that you are following the charts and not following the television and the analysts that are telling you go. It's all over, soft landing. All right, let's go to the VIX. Now, this one's interesting because we had a bearish engulfing candle today on the VIX. The VIX could go a little bit lower next week. This is interesting because we have a positive divergence on the CCI. See this? We have the CCI at that low. We went to a lower price low on the VIX, but we have a slightly higher low on the CCI. That's a positive. So I do think that we're going to go just a little bit lower on the VIX, and then we're going to move right back up to my target up here. So I'm going to go ahead and put my green dotted line right there so there's no confusion. That's where my target is. It's no different than an analyst coming out and putting a high target on, any stock and keeping it there. They often revise their targets up or down. I keep that target in place. It will stay in place until we hit it. Then we start drawing new target levels. So that's it. Folks, I have to thank you again. The week before last, we hit 10,000 viewers. Last week, we had almost that. It'll eventually go over 10,000 as people go back and review for notes. But thank you for sharing. Thank you for liking. Thank you for your comments. I know that there's a lot of questions that come in. I try my very best to answer every single question. If it's not answered right away, hang in there. I have a system for doing that. If you see me like your question, then I most likely have responded to it or commented about it. If I do not have a like next to your question, it means I haven't had a chance to answer it yet. It's not so easy to answer or address 300 comments in a week because we already have our members on the member page. There's questions there. Over the past couple of years, I've answered tens of thousands of questions. It's not an easy thing to do, I assure you. So be patient and keep your eyes focused on the charts. Make sure you're managing risk, and we'll see you next week. So long.
Hello, John Najarian here. If you want to trade like a rebel, if you want to party like a rebel, well, you got to come to RebelCon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. We start the 21st of September, go until September 24th. It will be more fun and more live trading than we've ever done before. That's why it's called RebelCon 2022. We're going to have barbecues and double the amount of live trading. So if you want to book that now, make sure you do, because the guest speakers, as soon as we announce those, this thing's going to be sold out. It's going to be something you do not want to miss. Limited to 250 people. Sign up now for RebelCon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the rebellion.